when it was released on Monday, June 1, Jonathan called me to talk about it. And he said, Tom, it's taking business intelligence and putting it into compliance. And I thought that was about the most prescient remark anyone could have said about it. I've quoted him liberally since then. And Jonathan, I thought we might start off by you explaining that remark and where you see the 2020 update to the evaluation of corporate compliance programs.
Thanks, Tom. Thanks for having me today. Welcome, everyone. Yeah, the reason I said that is, business intelligence is more than just data analytics. As we have discussed on numerous occasions, it appears that, the compliance journey is not only one for companies and the like, it's also one for the Department of Justice, and they seem to be on a journey themselves. And I think what we're really driving to is it's a formal process for analyzing data from all sources and presenting actionable information that helps senior management, managers, and other corporate end users make informed business decisions, including enhancing the compliance program. I've actually taken it even a step farther and say, I think this is really, if you're looking at the journey, this is really a step towards getting to enterprise resiliency, which can be defined as the organization's capacity to anticipate by monitoring, of course, react and adapt to change and new risks, but not only to survive, but also evolve, I think is really important. So in summary, compliance really needs to be proactive. Specifically, it needs to be a dynamic and continually adapting process. And I think that's why we saw the revisions come out without fanfare from the DOJ relating to the evaluation of corporate compliance programs, Tom.
So these are some of the key themes we're going to discuss in this webinar. But before we get to them, first of all, this webinar is being recorded, and that recording will be available. I've also prepared a white paper on the 2020 updates to the evaluation of corporate compliance programs, and we will have a link to that white paper. And then, of course, the slides that we have will also be made available. Our producer and administrator, Megan, will be sending out an email probably next Monday, which will give you links to all of those. So please feel free to share the materials that we prepared for this. Some of the key themes that Jonathan and I see are risk assessments, continuous monitoring, and continuous updating. The use of compliance in mergers and acquisitions, most specifically around pre-acquisition due diligence, and how the Department of Justice sees pre-acquisition now as equally important to your post-acquisition activities. Data, one of the themes that Jonathan touched on that we will talk about throughout this podcast, or rather webinar, is the use of data by the compliance function. Institutional justice and institutional fairness, something that the DOJ really reemphasized in this document, and that leads to the role of the Chief Compliance Officer. So we're going to start with risk assessments, and the key change, I believe, is found in this language. In short, prosecutors should endeavor to understand why the company has chosen to set up the compliance program the way that it has, and why and how the company's compliance program has evolved over time. Jonathan, could you pick it up from there?
Yeah, absolutely. As we all probably know, when we talk about compliance, I think it's important to kind of back up a little bit and talk about, risk, and then even up further, the governance. So in the GRC protocol, if you will, it's a waterfall concept. Good governance leads to good risk management. Good risk management really drives the compliance process. It's not the other way around. And so I think there's a reason why, the guidance really harps on risk assessments, and I think there's a reason why, they keep updating that particular section. So the updated version of the guidance, I think, places more emphasis on providing the value and effectiveness of the risk assessment process. So I think what's happening here is the DOJ is requiring more clarity on how the compliance program has evolved and proof that the program is generally risk-based, which some are not, unfortunately. I think the Department of Justice is seeking more information on that process, on the process used to conduct the risk assessment, and evidence that companies are allocating the appropriate resources to the appropriate risks, and not only in low-risk areas, by the way. The other thing that I wanted to point out is that I believe that what this is really saying is that companies really must demonstrate their efforts to align the results of the risk assessment with the company's policies, procedures, and controls, and take measures to monitor and track these risks to ensure they are appropriately mitigated. So, to kind of surmise here from a risk assessment process, many of us out there believe that this is one of those processes that we do annually. That's not the case. I think what we're talking about here, and what I was talking about early on when Tom had mentioned business intelligence, is, and it's kind of ironic that the new guidance actually mentions lessons learned probably more than 7 or 8 different times. I think what has to happen is your risk assessment really needs to roll with the cadence of the organization, meaning that, as events happen, the risk assessment process is looked at to make sure that we are looking at the risks in the right way. As risks emerge or evolve, those things are taken into consideration. And we also take into consideration all the tentacles related to that, vis-a-vis policy, procedures, controls, and the like. And so it's one of those things that is really, it's the engine that's really driving the compliance program. And I think what we're really focusing on is, getting away from that snapshot approach and working more towards a continuous and evolving, again, using the word evolving process related to risk assessments. Annually or biannually, I think we need to wash that away. If there's a significant change, a reduction in force, a crisis, or anything like that, a merger, an acquisition, some key event like that, even in not only in your space, but in other space, which I think that's one of the things we'll talk about when we get to data or business intelligence. It's not only the data that you're getting internally, it's also the data and the feeds that you're getting externally as well. For example, if one of your competitors has an issue, those are the things that really should be looked at and evaluated accordingly. And then, going back and looking at the risk assessment process.
John, I'm going to stop you for a minute. We've got a question from somebody. Do you mind if I ask?
Sure. Absolutely.
Yeah, so it's is there really an expectation that risk assessments will be done more than annually, and how will there be time to actually monitor and update processes?
Well, I think there is an expectation that they should be updated manually for sure. And how will you monitor and update processes? I think that's one of those things where it's an evolution, not a revolution. And as Tom has said over and over and over again, document. There's a lot of things that just cannot happen overnight. So for example, if you know that there's a change and you looked at your risk assessment process and you know that a policy, procedure, some type of system needs to be tweaked, I think it's at that point where there needs to be a appropriate contemporaneous documentation, actually memorializing the fact that you looked at that risk assessment and what those particular outcomes might be. I don't think you'll ever get in trouble, and I use that very loosely, but I really don't think that they'll cast harm, the DOJ or anyone else will cast harm on you if you identify it and put a plan in place to correct. I think what happens is if you ignore those particular things or let them go too long without being remediated, I think that's where companies and organizations put themselves in harm's way. And I'm interested to hear what Tom says as well.
So that's a great point, and I want to pick up on this last bullet point on this slide, which is, has your risk changed in the past 2 months, probably even the last 3 months? The answer is, without a doubt, it's changed. So as your risk changes, as we really move through the first phase of the coronavirus and COVID-19 pandemic into the reopening, how has your risk changed? Certainly work from home, and the compliance risks around that, but also, what about your supply chain? What about your sales side of things? Are you selling with primarily employees so that it is in-house sales, or do you primarily use third parties? All of the risks may change because of what has happened over the past couple of months. So your risks will have changed, and the DOJ seems to be leaning towards updating your risk assessment when you have a major shift and your risks has changed, not necessarily on an annual basis. But that really leads to what I wanted to start to talk about, which is continuous monitoring leading to continuous improvement. And if we also stick with sort of that last question, what I heard there was, how do we monitor continuously? And the key change in the 2020 update was, does the company review and adapt its compliance program based upon lessons learned? There's an incredible wide variety of data and information. I don't want you to think this is just numbers. This is information that's available to you inside of your organization. What can you do to see how compliance is doing? What internal information do you consider? What about, so for instance, obviously hotlines are an important source of data because people are calling in and raising their hand and raising issues. But the Department of Justice specified in the 2020 update, and it really drove home the message to me about continuous monitoring. They said, who is looking at your policies and procedures? If they're available on your website, who's clicking through to them? Where are they located? Is it a high-risk geographic area, or is it in another geographic area that you didn't consider high risk, but because of the nature of questions coming in, or excuse me, not even questions coming in, people looking at specific policies and the procedures, what can you glean from that? Have you increased your third-party sales in a new geographic region during the time of COVID-19? So I don't think many compliance practitioners had thought about the places that people looked at your policies and procedures from, but that's a source of information. I mentioned hotlines. What about questions? Do you have any formal policy or procedure or access for people to email in questions to your compliance function? Do you catalog and categorize the questions that come in via email to your compliance function, whether they're to the Chief Compliance Officer or other people who have more fully participated in the operationalization of your compliance program? Do you have an internal Twitter function, Jammer, or other internal similar social media function that allows you to have questions percolate up to the compliance function or comments? Do you categorize those, and do you keep that data? So what information do you have or do you consider? We may not have thought about those as risk assessments, but they could certainly be a part of continuous monitoring. And I think this is where the DOJ is leading us to: what are you doing on a regular basis to assess your risks? What information are you looking at to assess your risks? And then what are you doing about it? I'll get to that with continuous improvement, but they also specified you need to look at areas external to your company. Jonathan and I both are big fans of the COSO 2013 Internal Controls Framework. Well, in that internal controls framework, they have controls around external communications for your compliance function. This could be your competitors. This could be your customers. Certainly business intelligence, as Jonathan talked about, is going to be critical for business resiliency, but business intelligence also means information coming from your competitors. If you have ever lived or worked overseas, you know that the expat community in every country tends to segregate itself to people from that country. So for instance, I lived in Dubai once for a period of time, and I was in the energy industry, and the energy folks who tended to be Americans tended to segregate or congregate together. It could be socially. I was in a cycling club, but golf, get-togethers for dinners or those sorts of things. All of those are data sources for information. And then what about your customers? What are your customers telling you? Do you have a new set of customers? Do you have new products or services developed in the time of COVID-19 that you are delivering to your customers? So that's an information source. I mentioned hotlines, and I spent some time around policies and procedures because, once again, I don't think that's an area that many of us had thought about in terms of information for continuous improvement. But who's looking at your policies and procedures? What specific policies are they looking at, and where across the globe literally are they? That's all information that you can use on a continuous monitoring basis. And that, of course, leads us to...
Oh, Tom, I'm going to stop you again. I've actually got a question about the hotlines.
Okay.
So from your expertise, what measures can be taken in order to enhance the confidential information of the reports received in those hotlines?
So a hotline process really starts with, obviously, someone speaking up, raising their hand, utilizing a hotline. But from there, the key is to start with a triage. Triage that report. Is it credible? Is it something that's serious? I don't want to say routine, but is it something that could potentially be a legal violation that you might need to utilize get the information to your board very quickly? Might you need to utilize outside counsel? Does this need to go to the general counsel's office so that the attorney-client privilege can be invoked? But it all starts with your triage, and from your triage, you determine the level of response. You have to thoroughly investigate the information that comes in, and a part of your hotline process should be communicating with the reporter. So I wouldn't term it in the phrase using confidentiality. I would suggest looking at it in terms of a process of, once the hotline report comes in, what's your speak up culture from there? Do you triage? Do you investigate? Do you remediate if need be? Do you elevate the concern if it merits elevation to the board of directors? And do you communicate with the reporter to the extent you can, and then close out the issue? And then do you use that information that you gained either from the report or either from your investigation, or if you even went back and did a root cause analysis on that to give you information? And if you didn't use that information to improve your program or change your program, why not? And document all of those steps going forward. So I hope that answered the question. The key change in continuous improvement was, does the company have a process for tracking and incorporating its periodic risk assessment lessons learned from either the company's prior issues or from those of other companies operating in the same industry and or geographic region? I touched upon this, the last phrase, a little bit as a source of information. Obviously, this includes FCPA enforcement actions from the Department of Justice, Securities and Exchange Commission, or international anti-corruption, anti-bribery enforcement actions, as we saw in Airbus. You may not think that Airbus really applies to you because it was so ginormous, 3.9 billion, literally across 10 to 15 years across the globe. But if you look at the individual bribery schemes that were utilized, are those things that you need to consider within your organization? And the one I would point you to that we had not seen before, literally that I'm aware of, was the sponsorship of a sports club in Indonesia. How many people would think of that as a bribery risk? Well, it turned out that that sports club was owned by the government official who had contract signing authority over the product or service that Airbus was delivering. So there's a wide variety of information and lessons learned that you can utilize in terms of your continuous improvement. And that, of course, leads to, do you simply check the box? Meaning, if we go back to the hotline example, hotline report comes in, we triage it, we investigate it, and then we file it. Or did you actually remediate that issue? And do you have documentation of that remediation? Anyone who has ever heard me speak literally before knows that the three most important things in any compliance program are document, document, document. Well, that's even more so now, because as Jonathan said, when the regulators come knocking, they're going to want to see the documentation of your change, and if you made no change, why you made no change. And it's based upon your risk management protocol going forward. So this is really, please think of this as a continuous loop with a variety of information sources coming in a way that you may not thought of before. Certainly a risk assessment, but think about a root cause analysis. Think about if you utilize that in conjunction with your hotline reporting and your investigation, how powerful a tool that could be. But some of these outside sources that the government has mentioned, your customers, your competitors, any newspaper articles or other pieces of information that would lead you to see that there are gaps in your compliance program that need to be remediated. And I can't emphasize the documentation enough, because you may be routinely getting information in and making small tweaks to your compliance program. A change here or even a change in wording of a policy and procedure. Well, that's an update. That's an upgrade. And if it's done for a reason, that should be documented, because 3, 5, however many years down the road, if the regulators come knocking because either there's been a whistleblower to the Securities and Exchange Commission, or there's been something come to the Department of Justice and they want to see what you did in Q2 2020, they're probably not going to accept the answer that, well, we were all working from home and we didn't have access to that information, or we didn't document that information. You have to have documentation available to show the regulators, but that's simply having that documentation of getting information in and making a change based on it helps show this continuous improvement going forward. So next we're going to go to mergers and acquisitions, and the key change here was the language, was the company able to complete pre-acquisition due diligence, and if not, why not? Jonathan?
Yeah, Tom, mergers and acquisitions, always a really sticky subject, right? A lot of issues, either pre or post acquisition from a merger and acquisition type of arrangement. I can tell you from experience and being on both sides, doing pre-acquisition compliance due diligence and actually, doing post-acquisition due diligence, that this is one of those areas that it's really been talked about for a really long period of time. We all know about Halliburton and the and the guidance that came out of that. But really, what I want to focus in on is that an effective compliance program should really include comprehensive due diligence of any acquisition target, pre-acquisition due diligence, as well as a process for timely and orderly integrating the acquired entity into the existing compliance program, their particular structures, and looking at internal controls. Those things are absolutely essential. And one of the things that I wanted to walk back something for a moment, because Tom, you said something which really triggered something in my mind when we were talking about sort of continuous improvement. I think really where all of this is going, when I start to talk about business intelligence and enterprise resiliency, and I've even talked about enterprise-wide risk management, is that the compliance ecosystem is something where you can't look at each of these elements on its own. You need to look at all of these elements in combination with everything else that should be going on in your compliance program. Mergers and acquisitions is a great example. We talked about risk assessments not too long ago, right? So if you're going through a merger and an acquisition and you identify a risk that you hadn't identified before, obviously that's something that you should go back to your risk assessment and change. So I think there's a lot more in the journey of compliance that we're probably going to get to at some point, but I really think that the most progressive compliance programs that I have seen, and when I've talked to those compliance officers, are the ones where we're not looking at each one of these areas, whether it's mergers and acquisitions, third-party risk management, confidential reporting, and the like, as individual type topics. It's where we're looking at compliance within the ecosystem, the total ecosystem, and making sure that we're touching on all the important things in order to allow the compliance program to evolve. That being said, when you do due diligence, it does enable the acquiring company to evaluate more accurately each target's value and negotiate the costs of any corruption or misconduct to be owned by the target. This is an opportunity right here whereby, again, I'm not a lawyer, but I think there should be some discussion and some verbiage in the agreement that if there are things that are uncovered, it certainly gives you an opportunity to, number one, reduce your purchase price, ask for some other type of concessions, or do some other things related to the severity of the issues that are found. I do believe that flawed or incomplete pre or post acquisition due diligence can allow misconduct to continue. And one of the key things that I really wanted to point out here on today's discussion is that there's something that I have seen in practice over the years, which is just, it's easy to get lulled into this. And that is when we're doing pre-acquisition due diligence or post-acquisition due diligence, we all come up with recommendations for improvement. And there may be things that really need to be changed based on risk. And like we talked about, it's an evolution, it's a evolution, not a revolution. I am telling you right now that if you do not do proper follow-up on these things, this is where you can get fooled very quickly. This is where it's easy to have a phone conversation and kind of run through the remediation steps, with that particular acquisition, and have them say, yes, all of these things have been implemented. I've seen time and time again where that lip service is nothing more than lip service, and companies have gotten burned over and over and over again. So one of the key things that I really wanted to point out here, and it's not really addressed in the guidance, is, but from a practicing professional's perspective, is that follow-up is ultra critical, whether it's pre-acquisition or post-acquisition, because I do think that can allow, if not done properly, it can allow that misconduct to continue or continue to be condoned. Therefore, I think companies must demonstrate that their M&A due diligence efforts and document their steps that they took, as well as their response plan and approach, are really critical here for addressing any red flags uncovered. And so, like I said before, and we talked about, this, just moments ago, if you do uncover red flags, it doesn't mean that the deal is bad. There are a lot of acquisition targets out there that don't have robust compliance programs. Some might not even have a compliance program. But when you identify those particular things, whether it's a red flag or something else, those are the types of things that really need to be addressed contemporaneously. And you need to put a plan in place to remediate. And I am telling you that from experience, that if you do not take that seriously and you do not put the right level of scrutiny and skepticism on those particular issues, that those are the things that eventually burble up and really do bite you very hard, or could bite you very hard in the future. So, Tom, that's really where I'm going with M&A. But I think all the points on the screen here, I think we've addressed.
So let me just pick up on a couple of key things, or at least things that I think are key. And let me start with that last one. I would rephrase it in the following. If you acquire a company that's engaging in a anti-bribery, anti-corruption violation, and they continue to do so after you've acquired them, it is not they who are engaging in the violation, it is you. And that's how companies get into FCPA hot water. There's no such thing as springing liability. It is now your company that is engaging in the violation. I think everyone understood the need for the steps in post-acquisition due diligence, forensic auditing from the FCPA perspective, integration of the company into your compliance program, training, all within 18 months. But what this 2022 update gives us, or rather mandates, is your pre-acquisition phase. And the Department of Justice is saying, if you cannot engage in pre-acquisition due diligence, you have to have a very good reason, but that reason is not going to be enough to get you off the hook or put you in a safe harbor, because then you have to do all of that work after you close. And Jonathan referenced the Halliburton opinion release around what you can do or what you have to do and how quickly to do it if you close on a transaction where you've not been allowed to do pre-acquisition due diligence. That was back in 2008, and the timeframes were 30, 60, 90 days to look at high risk, low risk, and medium risk operations, both from third-party agents to high-risk geographic areas to high-risk customers. That's its incredibly short time frame to do that work and turn it all over to the Department of Justice. The more time you can put into your pre-acquisition due diligence, the better off you're going to be post-acquisition. But there's another reason, I think, unique or specific to this point in time, which is the following. In addition to COVID-19, we're all going through the economic downturn and the economic dislocation. And I'm in Houston, so it's particularly acute in the energy industry. But what that means is there are going to be a lot of distressed assets, a lot of companies filing bankruptcy and being sold out of bankruptcy, a lot of companies looking for a white knight to purchase them. I think in Q3, Q4, and into 2021, we're going to see an explosion of M&A work. The Department of Justice is telling us that you had better do pre-acquisition due diligence. And if we're in the middle of an economic dislocation and you're cut back to the bone, or you can't bring on additional headcount or additional resources, it's going to put additional pressure on you. So how are you going to do this pre-acquisition due diligence? You need to do it quickly and efficiently, but it's going to inform your post-acquisition integration. So I think we're at a point in time where this is actually more important now. But if you follow these steps the DOJ's laid out, they've already announced they're going to, there's a safe harbor. So there's a real benefit to following all of this.
Just a question on that before you go on, if you don't mind. What happens if the target company refuses to be evaluated by a pre-acquisition DD? Do you not perform the deal, or do you submit a complaint to the Department of Justice, or something else?
Well, that's a huge red flag.
So Jonathan's absolutely right. That's a huge red flag. If they won't do it because of the legal requirements from their country, that's certainly one thing. If they won't cooperate with you because they don't want to show you their books and records, that is really a red flag that you may not be able to overcome. At that point, you're not required to turn them into the Department of Justice because you may not have evidence of any sort of FCPA violation. But if you do engage in due diligence and you do find evidence of a violation, never forget the opinion release process that you can go through to lay out the remediation and mitigation steps you want to put in place to get the department to bless that, so that you will once again fall into that safe harbor. But if a company won't, as opposed to can't, let you engage in pre-acquisition due diligence, as Jonathan said, that's a huge red flag. So next we're going to turn to, I think, one of the biggest changes, and I'm just going to read this because this is completely new. And I'm going to turn to Jonathan. We're going to spend some amount of time on this. It's data. And the change in the 2020 update read, do the compliance and control personnel have sufficient direct or indirect access to relevant sources of data to allow for timely and effective testing of policies, controls, and transactions? Do any impediments exist that limit access? And if so, what is the company doing to address the impediments? Jonathan, what do you think about this?
Well, it's sort of an interesting bar to set now, isn't it, Tom? Before we're all trying to figure out what data to use, and now it becomes a question of really understanding your data sets and where that information is coming from and how to use it accordingly. And that's why I think this goes way beyond just using data and data analytics. I think that when we talk about relevant sources of data and where is this coming from, how often are we getting this information, it's more than just creating a dashboard. But I think what is now happening is that we live in a data-filled environment, and there's data everywhere. And I think what is really happening is that there's a new light that's really cast on compliance to say you need to look within your ecosystem at everything and where there's data, and understand your key risk indicators and the like, and all those other things that potentially you could use to not only monitor but help evolve the compliance program. And whether you have direct access or indirect access, or how all of that data flows, I think these are processes that the DOJ is expecting, and they're expecting these conversations to start taking place. So it's no longer good enough to say that we have we've looked at our data and this is the data that we use. I think it's really what's really available out there. So in other words, I'll give you a great example. If we were looking at bribery and corruption, for example, and you had a system that tracked your expenses, is that data in one particular area? Is it siloed? Do you have access to it? Can you work with it and take that unstructured data and structure it in a way that will yield some patterns, trends, call out red flags, and so on and so forth? And so it really now kind of ups the game when it comes to using that data that is available. And I think what is really, really critical here, and we haven't talked about it yet, is if you think about everything that we've talked about today, whether it's risk assessments, whether it's continuous monitoring, whether it's mergers and acquisitions, or what we're talking about now, it's really incumbent upon the chief compliance officer to surround themselves with the right people to be able to execute on these particular things. And really what I'm driving at is resources, right? Not only do we have the right data, but do we have the right people working with us? Do we have the right resources? It's not only numbers that's important, it's also skill sets that are important. So when we're talking about data and we're talking about do you have access to it and can you work with this data, you might now need a different skill set in compliance in order to execute on what I call, sort of the next bar of, what the DOJ is expecting. And in order to get that business intelligence, which is kind of where we're driving towards, you are going to have to start to think about that today. And again, I personally don't think that they're expecting that as soon as this was released a couple of weeks ago, that all of a sudden, there's all of this data, this influx of data that's being sifted through and structured in a way where, we're creating sort of these real-time, situations. But I do think that this is something that also needs to evolve in relation to the compliance journey. And if you can't do this, again, it's almost like, we talked about when you do the risk assessment, it's probably important to document that you looked at the risk assessment. Where do you document it? I think board minutes are a good place to document certain things like this. I think from a governance perspective, those things are going to have to be relooked at. I would want to make sure that we mark time with these particular things. I also think that all of the particular highlights here that we're going through today are things that not only the board, but senior leadership should be looking at, in particular, really asking the chief compliance officer, what do you need in order to take that data and use that data accordingly to give you that intelligence in order to not only manage and call out potential issues or problems, but how do we evolve the compliance process and the compliance program going forward? So I don't think this is one of those things where this is sort of an esoteric concept in a way, but I think there's some very specific things in here that can be done in order to get to the heart of this. And I think what the DOJ is really driving at is, if you look at the most successful compliance programs, the chief compliance officer has a couple of great attributes, right? And they also have some interesting ways of dealing with things. The one thing that I see that really does separate a good chief compliance officer from a great chief compliance officer is knowing the business. And I talk about this all the time. If you know the business and you know where those risks are and where those controls should be, you should really start to understand where that data is coming from and how do we access it and use that data, again, as part of our business intelligence. And I think that's a process that's going to have to evolve over time. Some people, I think, are already doing this. Some people might be really advanced at it. And I think for smaller companies that are resource constrained, and when I mean resource constrained, again, I don't mean by the numbers. I mean, probably it could be a number thing, but a capacity thing. But I think it's also by the skill set. So if you really look at, if you go back 15 years ago and you look at internal audit and what really constituted internal audit and the skills required for internal audit, and as to compare them to today, it's really evolved significantly. You're not only charged with doing audits, but you need to understand compliance, enterprise risk management, COSO, data, fraud, disclosures, Sarbanes-Oxley. I mean, the list goes on and on and on. I think today the chief compliance officer also has to evolve. And I think what they're saying is that not only do you need to make sure that your program evolves, but I think you need to make sure that as you go through this journey, you're looking at all this data and using it more on a real-time basis to continuously monitor or ongoing or use or create some type of ongoing monitoring program to not only call out red flags, patterns, and trends and anomalies, but also to enhance and modify and evolve the compliance program in a way where it's giving the organization maximum protection and that enterprise resiliency that we talked about.
Jonathan, I had a couple of specific questions that came from the new language and your thoughts on it. The first is the phrase compliance and control personnel. By separating those two, that means to me that compliance, if it's staff with a legal function, are different from control personnel. And then it goes on to say there should be timely and effective testing of policies, controls, and transactions. I was wondering if you might give a few remarks based on your experience around internal controls, assessing controls, and how data from controls could be used by a CPA such as yourself to help provide information for continuous improvement and continuous update.
Tom, that's a great question. Here's what I will tell you. I've been thinking about this and actually was ruminating about it the other day. we were all forced at some point after Sarbanes-Oxley was enacted. For those of you that where this applies, and we were at some point where we had to identify what was called by the PCAOB fraud controls. And I think what happened is that there were individuals that really didn't understand fraud that went through the control matrices, and they said, well, this is a fraud control. Well, that's great, but it's not only the identification of the fraud control that was interesting, it's also the fact that was that control designed appropriately to deter or detect fraud? I think where we're going with all of this, and I think from a best practice perspective, if it were me and I was running a compliance function, I would go back and look at that risk set and now start to identify those compliance controls. And are those compliance controls designed, and are they effective? So, for example, a fraud control may have a dual purpose. It may also be a compliance control. However, and here's where I add some caution, there may be other things that are required for that control to really and truly be effective from a compliance perspective. So in other words, we stubbed our toes. Many of us stubbed our toes in identifying what I'll consider to be fraud controls. I think if we start to identify what are compliance controls, I think the benefit there is you could say to yourself, what are our objectives? What are we trying to achieve here from a compliance perspective? Does that control meet that objective? And if it doesn't, it gives you the great opportunity at that point to redesign or enhance that control appropriately. So just like we talked about with doing the fraud risk assessment and all these particular things, I think one of those things that really needs to be looked at on a regular and ongoing basis based on the cadence of change within the organization are these particular controls. And I think at some point, what's going to wind up happening is you're going to see not only in our internal audit testing and monitoring for internal controls over financial reporting and also testing fraud controls, but I think the perfect scenario is when internal audit and compliance are working hand in glove with the right level of skill sets, and they're actually testing those compliance controls for effectiveness as well.
Next, we're going to turn to institutional justice and institutional fairness. And the key change was, does the compliance function monitor its investigations and resulting discipline to ensure consistency? This may seem like a self-evident part of institutional justice. It certainly was something that I'd been talking about for some time, but now we have the DOJ saying, is the compliance function monitoring not just investigations, but the discipline literally across the globe? This to me drives home the key message from the 2019 Evaluation of Corporate Compliance Programs document, which was corporate culture. And institutional justice and institutional fairness are key concepts in corporate culture to assure trust by your employees and accountability of management. So are you ensuring consistency? This drives the change, or one of the changes I think that's key for compliance officers that came out of this document, because it really reinforces and I think expands the role of the chief compliance officer into ethics and into the ethical culture of a company and the ethical behavior. Because once again, both institutional justice and institutional fairness help drive ethics in an organization, because it drives trust and it drives accountability. So that's a key change for the compliance function. But now let me go to a change in the role of the CCO. And on this slide, you'll see certain information or language, rather, which is underlined. That's the change in this preamble to the DOJ's thoughts around a CCO. So is the corporate compliance program adequately resourced and empowered to function effectively? And focus on that word, effectively. Are you able to effectively do work? Or is it under-resourced or otherwise ineffective? Well, clearly under-resourced. I think we probably know that means both headcount and resources for the compliance program, but otherwise ineffective. So the DOJ is going to be looking directly at your compliance program and the CCO. And then finally, adequate resources, appropriate authority, and direct access to the governing authority or appropriate subgroup of a governing authority. And that's direct language for a CCO. So as the CCO, do you have access to the data? Does that access provide to you the information that you need to move forward? Are you adequately resourced to cut through siloed data in your organization? Once again, if you don't have access, why not? And that's something that you're going to have to put in writing and documented so that you can explain that if a regulator's come knocking. But it also reemphasizes a key theme the Department of Justice has been talking about for the CCO and the compliance function since at least the FCPA corporate compliance, FCPA corporate enforcement program, which was announced in November 2017. And that's what's the expertise of the CCO? What's the expertise of your compliance function? Do you have people in there who know what they're doing? What is their background? Do they have training? Are you providing updated training for compliance functionaries and a chief compliance officer? What about funding? Do you have necessary headcount? Once again, in this economic downturn, if a company cuts, will that be viewed negatively by the Department of Justice? It could well be. One company in Houston cut their entire compliance function and rolled it into the corporate legal function. Well, if you don't have that reason for that documented and documented then to show the success or at least the resilience of it going forward, I think you're going to be in trouble. Do you have resources? And think about that in terms of the data that we talked about. Do you have resources to cut through the silos? Do you have resources to help you look for patterns and rake leaves? Do you have an AI or other machine learning resource or technological tool available to you? And then finally, and this is something Jonathan has hammered on for years, do you have access? Do you have access to the board, and does the board then appropriately oversee your compliance function going forward? So Jonathan, any thoughts on this?
Do you mind if I pop in with a couple of questions?
Sure.
Sure. So I've got two of them here. And the first one is, what are your views on the local CO reporting operationally to the local country general manager? Do you see this as still acceptable to the Department of Justice?
I think the CCO or CO, the local CO, can have a dotted line reporting to the local country manager, but if they report directly, that's sort of like the fox guarding the hen house, no pun intended from Tom Fox. But a local CO needs to report up to the chief compliance officer or at least someone in the compliance function. If you report to a local or regional manager, country president, or other similarly situated corporate function, I think that's when companies are going to get into trouble because you have to have independence of your corporate compliance function up and down the chain.
Perfect. And what is the update on the rationale to separate legal from compliance and compliance from internal controls?
Well,
Jonathan, that's something you think about a lot.
Yeah, it's actually the number one thing on the number one article on my blog that people download. It's kind of interesting. Separating, you have to understand, legal's job is to defend the company. Compliance job is to make sure that people comply with the rules and regulations from an ethical perspective. So right out of the gate, there's a conflict there. And so, I have, depending on the nature and the situation, I mean, certainly I think from a best practice perspective, I believe that they should probably be separated. I have outlined many discussion points and articles in my blog post. If anybody wants that, I could certainly share that with them later. But I think that's something there. From a controls perspective, I really do think if you take a look at this from an independence perspective, and that's something that we look at, are independent in fact and independent in appearance. It's management's job to really create internal controls, and it's really internal audits and compliance job to make sure that those controls are effective or as effective as they possibly could be. So it's okay to provide guidance to management with regards to those particular controls within the business. And I do think it's okay for compliance to make sure that those controls are, not only effective, but not only designed appropriately, but they're effective, vis-a-vis through testing, which we talked about before. So, I see more of a symbiotic relationship. If you look at I call it the Bermuda Triangle. If you have legal on top and compliance down in the left-hand corner and then internal audit down in the right-hand corner, I think if you're going to move forward in an organization to be really effective and to really, make sure that you're providing maximum resiliency for the enterprise, those three functions within the organization really have to be coordinated and collaborated. And I think that, we're going to see, I think there's more collaboration, communication, and crossover now from internal audit and compliance than I've seen in a while. And I think it's going to continue down that path.
Awesome. And there are a couple of questions in the chat about basically who it's appropriate for a CO to be reporting to. And I think this might be one of those things where everyone's situation is a little bit different. Do you have a recommendation for a great resource where someone can get clarification on, where a compliance officer can be reporting ethically?
Well, go ahead, Tom.
Yeah, Jonathan's actually probably the best resource I would point you to in terms of what the regulators say, what some of the top commentary is. In terms of whether a regional compliance officer should ethically report up, I would say I would look at it more from the business line and corporate reporting rather than ethically. The key is that they be able to take their concerns up to the chief compliance officer. In terms of who a chief compliance officer, if they're required to report to general counsel, I think the better practice is those functions are separated. But the absolute key question the DOJ is going to ask is, does the CCO have access to the board or the subcommittee of the board? And if they have access while reporting either straight line or dotted line, hard line or dotted line to a GC, that's probably okay, or a CFO. But if they don't have direct access to the board, that's where companies are going to get in trouble. So this is our last slide. And I just, once again, that these are three of my most favorite words around compliance, but I think it's even more important based on the 2020 update. Every decision point where you have to defend somewhere down the road needs to be documented why. You may not be there. There may be someone else in the CCO chair or in the compliance chair. You may be in a different corporate function. You may be in a different company. Every time you take an action which may have compliance consequences, it needs to be documented. Documented. That doesn't mean you have to have a full 5-page legal memo to file, but there has to be something in writing which shows not only your thought process, your decision-making process, but what the decision was and how it was implemented. I always recall from the 2012 FCPA resource, the Department of Justice will give you credit for having a well thought out program in every way, shape, and form. So if it's well thought out and you've documented, you're a good ways down the road. Explain on good faith basis why you approached the issue and then why you resolved it. No company, and let me repeat this, no company or CCO has gotten into trouble with the Department of Justice because they made a bad decision. They get into trouble because they made no decision or the controls were overridden or something along those lines. No one's gotten criminally sanctioned because they made the wrong decision. They got sanctioned because they made no decision or it was done without them knowing about it. And then finally, in a regulator's eyes, if it was not documented, it did not happen. So we're coming up to the top of the hour. Megan, do we have any questions?
There are a few. What are your views on part-time compliance officers in smaller subsidiaries, and how should a split reporting line work?
Well, I'll start off, and Jonathan, you can follow in. Yes, if it's the resource delivered for the function, so that if you have a subsidiary that doesn't perhaps warrant, its own CCO or CO, Can that person be part-time and have other responsibilities? Answer, yes, if you're adequately resourced for that business line, that subsidiary, that joint venture, whatever the business entity might be. And then in terms of hard line versus dotted line, once again, as a compliance function needs to report up to the compliance department, or if compliance is subsumed within legal, it reports up to the chief compliance officer, who then reports to the general counsel. You can have dotted line reporting, but the regional, geo region, the subsidiary compliance officer needs to be able to not only go directly to a CCO, but also be protected by that CCO if the regional operations manager or country manager or business unit manager doesn't like what the CCOs, the local CO is telling them.
And Tom, I would just add, I would go back to the three overarching questions. One, is the corporation's compliance program well designed? Two, and here's where the change becomes effective in the 2020 ECCP, is the program being applied earnestly and in good faith? In other words, is the program implemented adequately resourced and empowered to function effectively? And third, does the corporation's compliance program work in practice? So if you want to ask yourself whether somebody part-time, could work, I think you need to answer all of those questions, because if you're trying to cover off on any exposure areas, then I think, answering those three questions will be a good source of driving you to the right decision.
Should compliance officers take on additional roles, especially in these times where companies are merging roles because other people have lost their jobs?
I think that substitution is a dangerous proposition, and I think it also goes the other way around. By the way, when you have a reduction in force and you're asking people to step in the roles of somebody else, you're rolling the dice there, because you're assuming that they have the same level of skills and experience that somebody in that role prior had. And I just think that's something that is going to it's a case by case basis for sure, but you really need to understand the risks there. For example, if a tax director in a company left and they said to me, "Hey, Jonathan," and I was the CFO, and they said, "Hey, Jonathan, can you cover for this particular individual?" My answer would be emphatically no. I'm not good at taxes. I don't understand them. I worked on them 30 years ago. But for me to be a corporate tax guy, never happened. I think that's a real problem, that substitution.
So it looks like we're at the top of the hour, and we want to be cognizant of everyone's time. I wanted to thank everyone for attending. As I mentioned, we're going to make the recording available. We'll make the slide deck available, and also a white paper available. Jonathan, any final remarks?
No, I just, it's an evolution, not a revolution. And, stay tuned. There's a lot of great things out there that Tom puts out on a regular and ongoing basis. And, I think if you have any questions, please feel free to reach out. Thank everyone, and hopefully you're all well and stay safe.
Can we go back to that last slide with your with the contact information, so people know where they can go if they need a little more detail? Perfect.
Okay, well, thank everyone, and I look forward to visiting with you again in the next webinar from the Compliance Podcast Network.